Hello, guys. Welcome to the Trading Parrot. Today is Monday, and I'm here with Keith from Material Indicators. We are going to be looking at Bitcoin from a different angle compared to this morning. This morning we already have a live stream, and I cover everything to do with the breakout and stuff like that. But in this video, I pulled in Keith because I really want him to give us a different perspective. What we're going to try to cover today is everything to do with where is the liquidity located. And we're going to challenge whether we're going to get a new higher high next for the price. And as well, I want us to complement what I already covered in the morning to do with all the events happening during the week. How are you, Keith, today?
I'm good. I'm good. Coming off had a good birthday weekend and ready
Happy birthday.
to thank you. I'm just older. That's all that happens. I try to hit the rewind button, but I can't seem to find it.
That's funny. And did you had a great birthday party? Did you do something special?
I spent the day with my family and did a little bit of fishing. And my wife is
Oh,
left town today, so yesterday I spent with her before she had to get out and make some money for the family, so I can buy more Bitcoin.
oh yeah, absolutely. So guys, if you like us to do more streams like this and cover Bitcoin from as many angles as possible, so we have some edge against the market, make sure that you're hitting the like and you're subscribed to the channel, and of course, be as loud as you can in those comments. We want to see the comments pulling in there on the screen right now. So if you want to support the channel, go ahead and do that as soon as you can and as often as you want. Should we start with your charts, Keith? What do you think? Should we go with some
Sure.
material indicators, fire charts?
Sure. Let's look at liquidity and maybe to give this some context. I'll show the candle chart really quick and we can see how things kind of line up. I always like
Mhm.
to find confluence between between my TA and the liquidity, because you can have liquidity spread throughout the order book, but it's really where it's really most important is where we see it around those technical levels that we're watching, right? So
Mhm.
let me go ahead and share the screen and see if we can make this happen. I'm going to share this one and get off of that really quick. All right. So, are you seeing my trading view chart at the moment?
Yes.
Okay, great. So as you can see, we had a red weekly close, but I'll be honest with you, I wasn't really concerned so much with the color of the candle as I was concerned with where it closed. We have had so much of a struggle clearing this 69K level, right? It has been very strong resistance the whole way up. We broke above briefly, but we had all these wicks below. And to me, those wicks below were a sign of weakness. Okay. Yes, we had strength and we had momentum that took us up, but then things started breaking down. We
Mm.
lost the 21 day moving average, fought our way back in. But again, it was wick after wick after wick that was hitting that, going below that 69K levels, which again resulted in another breakdown. So, past couple days, and of course, we have this series of lows, higher lows. Our local, our lowest low at the moment is around 59.3K. A couple of weeks ago, we kind of pushed things up into this, into this 61K level. Kind of establishes a local bottom here. It hasn't been retested, so that's holding so far. And really, over the past week, I think things are elevating now. We see some confluence here at the bottom of these candles. We're now in that in that 65K range. Even if you go to the wicks, you're in the mid 64.5K,
Mhm.
which looks like support. And I'll show you that here on the chart. But what I'm watching the most is to ensure that this candle, if this candle wicks below that 69K, we've yet to validate an RS flip up here. So we need to see full candle bodies up above this level to validate that. And until that happens, we're consolidating. Whether we drop back and continue to consolidate in this range down here, or we can actually stay above this 69K level and start consolidating here before this upcoming halving would be obviously something that bulls would like to see. So if we look at that now in terms of where the liquidity is in the order book, and this is very important, especially when we talk about where this lower low is, right? So if we head over to fire charts, this is a weekly view.
Keith,
Yeah.
before you head to this one, which one was the arrows based indicator that you were showing before? Is that the trend
Yes.
precognition?
That is trend precognition, and this really excels on higher time frames, daily, weekly, monthly
Mm,
candles.
yeah, I can
Um,
see
you
that.
you can use it intraday, but it requires some adjustment. So let's just talk in terms of what we're looking at now. The defaults are set for these higher time frame candles, and this indicates that we had a trend reversal, right? From here, we were getting that downward pressure, and we had a trend reversal from here. This was the 64.5K
Mhm.
candle that we had talked about just a moment ago. There's actually two different algos here. This is the A2 plus algo. Arrows are pretty cut and dry, right? Green, green, green pointing up means up.
Yeah.
Red pointing down means down. Um, but down here we have. I'm running a different algo of trend precognition, and the dots are representative of the signals, right? So instead of arrows, we have dots here. But what's really the most important part of this algorithm here is this A1 slope line, this orange line that I have here. This moves in real time. So most trading view indicators have some lag, one candle lag to them, as these do, right? They don't validate until the adjacent candle closes. So it could show up right at the candle open, and it could it could flicker off and on depending on what the market is doing. It could flicker off and on before it prints, but typically, if we see them appear right at the candle open, right at the candle open close, those tend to be the best signals, and those tend to stay in place. Not always, but most of the time, those tend to stay in place. And we can also see the strength of the signal by the length of the tail, right? So this red signal up here, you see it has a very short tail to that arrow. It wasn't a very strong signal, still played out, but longer tails means a higher probability. And if we look at the data, up here relative to the indicator, when we
Mm.
hover over it, we can see this one had a 63% probability of being accurate, which obviously has played out. So
There's a
I
question from Tucker. He's asking, so is the idea that you trade immediately upon the appearance of the arrow, or as you were explaining, you kind of wait for confirmation on the next
Okay,
candle?
so that's a great question. Okay, and this comes down to understanding what else is happening in in the chart. So I've said before, and I say frequently, I never, and I don't think anybody should trade on one single source of data, not one single indicator, not one single source, myself included. And so you need to put things in context of whatever else is happening in the market, right? And yes, you can, you can wait for that confirmation, but these signals are really relative to the time frame. So if this is on a daily chart, it's really only relative to this next candle. And that in this instance, it means what this indicator is saying is it does not it expects that this candle would uh, have a low that is higher than this low. All right, a higher low.
Mhm.
And that's exactly what we got. Now, we often see that trend continue, but when we're seeing that trend continue, we often see this A1 slope line moving with it. And now we can see it had leveled off. If I expand on that, you can see how it has changed. It's actually losing momentum here at the moment.
Yeah,
And,
there's a very
and
bearish cross, right?
well, this isn't as straightforward as you would think in terms of crossing this blue line here in terms
Oh,
of
okay.
of like an RSI.
Hmm.
It's really this line right here, the center line that it crosses to send signals. So as for the question of do you trade right on the signal, if it's a strong signal and I have confidence that the market is indeed reverting from the prior trend, and we're talking shorter time frames here, then yes, I will oftentimes take that signal as it opens. Does it always work out to my advantage? No. Does it work out more often than not? Yes, it does. Would I be okay if I waited till here? Sure, I would. But there's, as the old adage says, the greater the risk, the greater the reward. So if I wait for that confirmation, which is the conservative approach, right? If I wait for that confirmation, which is often a good thing to do, then I may sacrifice some of my upside potential, right? So in terms of how I use this, I don't use this to automate trades. I use this really
Mm.
as kind of a guide to help me with my manual, with my button pushing, right? So so if I see that we're on an uptrend, and or if this was on a trajectory going up, I'd feel more confident about buying up here. But I don't feel confident about buying up here above this 71, almost 72K level, because you can see that the price already started to fade back a little bit from what we top out at today, 72, 750 ish, depending on what exchange you're on. So things got toppy up here, and you see momentum is, we're losing momentum down here. So if this thing was vertical, or at least had much more of an upward trajectory than I see right now, then I would be more confident about buying at this level. But I am not confident about buying at this level, and I'm going to show you why. When we look at fire charts, we can see that ask liquidity is stacking overhead, right? So we're now up to upwards of 52 million just at that 75K level. And you see it's laddered down. So, collectively 50, 85, you've got over 100 million right here. And you don't see that kind of concentration of bid liquidity right here. And really where I wanted to see it was above 69. So there is some decent liquidity
in
in
terms
here.
of support, you're
Right.
looking for support, basically, right?
I'm looking for support, and in my opinion, look, nothing, um, nothing illustrates sentiment better than liquidity, right? Because the simple fact that we have bids here, sure, there can be rug pulls. That happens frequently, but the fact that we have bids stacking in this range here protects us from that potential lower low. And if I zoom out even further, we can see what this looks like in the in the grander scheme of things. We talked about that 59K level, right? Where the lower low is. And we had at one point a considerable amount of liquidity down at this level between the 59 and 62K range. And that has faded. Much of it has come
Mm.
into the range up here, right? And turned into market orders, or just, stair-stepped its way up to push price up. But here you can see that some of these blocks are now starting to move up. This, seeing a block move from down here up to here, and from down here up to here, those are signs that the market, there's sentiment to hold price up at this level, potentially to herd liquidity up. But whether you think that, whether you consider these organic or you consider them manipulative, doesn't really matter. The net effect is the same. When when bids start moving up, price goes up, and we saw that happen, right? First when this came in, and it didn't really have the net effect of pushing price much. Then this one came in, and look what happened. Price moved up. And so what I look for in more of a macro view, in terms of when we're actually going to get that breakout to go towards a new all-time high, is where is the highest concentration of liquidity stacked. And if we look at history here, and I'll expand on this chart, and I'm not applying any filters here, so we're seeing what the raw volume looks like at each of these levels. Notice what happens around the brightest spots on the chart. What happens?
Reversals.
Yeah, look at this. Boom. And how much is here? 127 million just in that one level. Okay. And there's depth laddered below it. Okay. So those are the two things I like to see. I like to see heavy concentrations of liquidity near the price, and I like to see some depth to back it up. And that works in both directions. I mean, sometimes it's even far away. Like, always blows my mind how somebody places a large um, stack of liquidity way outside the range, and it still seems to have an effect sometimes. Again, here, look at this: 100 million with significant depth below it, and price moved, and this was obviously the bull market of 2021. So what we don't have at this point,
Yeah.
we don't have depth, we don't have a high concentration of liquidity here, and this, what we had up here, is starting to fade, right? It was concentrated here at about 75 million. And then we started seeing things thin out and ladder down. So this is suppressing price, trying to push price down a little bit. In terms of how much is holding price up, it's not very much. You're less than 30 million right here at 64.5. So,
Mm.
so I really, it takes nothing to fall through this. But the fact that we don't see anything down here, right? If we lose this range, then I think that we would look at the other consolidation ranges here, right? 50 to 52K. And if you lose that, then we get to talk about a dream target down here. But at the moment, there just does not seem to be any liquidity-based sentiment for these ranges right now. Of course, if we lost 59K, if we lost 60K, you better believe that some liquidity is going to come into this range pretty quick. But as of the moment, sentiment seems to be above 60, and even at this point above 65. And
And
now
Keith,
we're trying to stage an RS flip at 69.
and
But I
what do
want
you
to see more
think
liquidity
about
there.
the events that are coming up this week? Do you think they maybe those whales are not placing the orders yet because they are?
Well, I think that's a great point. I think that that both TradFi and crypto are waiting just a bit because we have some inflation numbers coming out this week. We see inflation numbers every month, right? Every week we
Mm.
get a new report of some metric or another. We've got some pretty significant ones coming up this week, starting with core inflation data coming up on Wednesday. And what might be different, and I'm no economist, okay, so I'll put that disclaimer out there now. But what might be different this time around in terms of the numbers that we're seeing, we've seen some interesting numbers over the past few months, but really from November on, all of those metrics were, I think, a little bit influenced by holiday staffing and holiday sales. So this potentially could be our first kind of clean report now that we've moved past, those holiday adjustments, if you will. And so I think, we've had some talk, obviously, for months and months and months. Fed Chair Powell has been saying that he thinks, we're on pace for 3 cuts, quarter point each, for a total of 75 basis points by the end of the year. And then most recently, we hear him tempering that a little bit, and more so than him tempering it are the other Fed presidents who have to do these media tours week after week that start telegraphing some messaging that says, well, maybe we might not have enough to date. First of all, they always say we need more data to be confident that inflation's coming down sustainably. And then, most recently they're starting to say, well, maybe, we might not need to cut just yet because, inflation is sticky. Well, if we see a cooler than expected year over year core inflation number, if numbers come down, it's already forecasted to come down, which is good. And I would expect that that's probably baked in. But if we have a beat on this, if these numbers come down, I think that the market would respond very positively to that. Um, if they go up, then I think then that there's concern that we might not see three cuts this year. But again,
And that's tomorrow. This one.
this is
Yeah.
Wednesday. First one is
Oh.
Wednesday, and then Thursday we have core, we have PPI and jobless claims. We had a scorching hot unemployment report last week, which says that the economy is as strong as ever. And so, that's one of those uh, um, good news equals bad news kinds of things. Although the market didn't really respond as negatively as I thought, because I think you have to drill um, into those unemployment numbers a little bit and kind of look, at individual sectors, is what it sounds like the economists were looking at. So, the net effect of that wasn't as bad as I expected. But in terms of what we have now,
Mm.
really, for me, it is, do we continue on this path of higher lows, and will we consolidate in this range? We've got a halving coming up. Um, we need to see consistently full candles above this 69K level with no wicks below. The second we have a wick below, for me anyways, that invalidates the breakout until we see those full candle bodies, and until we start making higher highs. Right,
Yeah.
higher
We,
highs will obviously change the dynamic of all of this.
we do have a CME gap between, I think it was between 68 and 69, coming from this week. We left a little bit partial unfilled CME gap from the previous week around 64K. Doesn't need to be filled, but it's just something that's there in terms of liquidity. And one thing I wanted to ask you, I think we should also cover what the whales are doing. I would like to see if these last three candles are driven mostly by purple, brown. For the people that are not familiar with this part, I think the
Okay.
purple is between 100K and 1 million, and brown is the largest one, right?
Right. So this is our binned CVD, and it's categorized by order size. And this is really important. Historically, we've seen purple whales really dominate the class for Bitcoin in terms of influence over long-term price direction. And um, since since Christmas, we have seen a significant amount of buying from this red class. Let's call them sharks. Those are $10,000 to $100,000 orders. These are market orders, by the way. Okay, so since Christmas Day, literally, and this is I have a normalized view right here to make it easy to see these moves. I'll show you what the absolute value looks like here in a second here. Um, but from this time, uh, we have seen just tremendous buying out of this red class to the tune of about $4.5 billion in market orders, up until about March 18th. And then you can see they started selling. So this is a normalized view. If they were up for, up to here, they've sold just a little bit. It looks like they've sold less than about 10% of what they bought. We can look at that in dollar values by switching to the absolute value, and now we see it in dollars. And on Christmas Day, that red class was down nearly 3 billion in terms of net flow. We'll call it negative 3 billion, and in that time, we went up 1.8 billion.
Hmm.
Do the math on that. And now we're close to 4.5, over 4.5 billion on that. And then what they've sold from then, let's see, 1.7, almost 1.8, and then down to, so they've sold about half a billion, 500, 500,000, 500 million rather, since that time. And so wait a minute, am I doing that right? Did I just add a B where I need a net 1.78, and then so 500 million. And now they're starting to buy again. So in terms of who led this move, I pointed this out a couple, a week ago, I think it was, that we saw, let's put them back in. We saw purple whales start coming back in. All right. And they started buying robustly on that dip down to, what was this, around, this was 63s.
Yeah. And the double bot
61.5.
they bought the double bottom basically.
Yeah, exactly, exactly. And meanwhile, uh, brown mega whales were also buying at that time, and red was selling, and retail was selling.
Mm.
So when you see that kind of activity, um, I I'm not a whale. I don't have the stack to be a whale, but if I can see what they're doing, I can swim with them, and that's exactly what I did. So they started buying, and they started buying with volume. I started buying with volume, and we'll have to see how this ends up in the long term for me. But at this point, I think that with the halving around the corner, the long term outlook for Bitcoin is as good as it has ever been. That does not mean that we can't have a big dip. There's certainly a history of 20 to 40% dips in bull markets, and even just before or just after halvings. So I'm prepared for that. And how do I prepare for that? I prepare for that by making sure that I'm saving some dry powder for those opportunities if they present themselves. Maybe they
And,
won't. Maybe they will. If they do, I'm buying.
and in terms of, just for the sake of transparency, in terms of your positions currently, you have many longs open. Are you shorting this last move?
I'm not shorting this. I wouldn't short this with your money. Um, and that's just because I just there's money to be made in shorts for sure. But I think in this environment, you have to be, I mean, you're scalping, um, or you have balls of steel and you think that the bottom's going to drop out. I, there was a long time where I was waiting for that flush down to 25 or even sub 20K, even 12K, and it just didn't materialize. And I just think it's hard to imagine price going there without a black swan bringing us there. Um, Considering we don't see any I mean like nothing down in those ranges. So there's nothing to support that at this point. But I watch this every day. That all it takes is minutes for somebody to put $100 million bid down here.
Mhm.
Um, we've seen that happen before. We're not seeing it happen now. So I think this is the playing field. I think that this 60K range, 59, 60K, where we have this range actually of 59 to 62, where we have some liquidity stacked and we have some technical support on the chart. But now with this series of higher lows, we're seeing that local low move up into this, potentially this 64. I think we've kind of validated 61K as a local bottom, and now in this past week, I think we have a chance to validate that's moving up to 64. A retest there, of course, would help validate that, or a breakout would help validate that. And I don't think we're getting 75K before this inflation report.
Mhm.
Certainly, it could happen, but to me, all the drama is at that 69K level, right? You just have to stay above here. This was closing above 69K was more important than closing green to me.
Keith, I know you have an upcoming live stream back to back with this, possibly. So I'm just going to try to spend the last few minutes giving an update on the daily, and in the 4 hour, maybe we can complement and ping pong some ideas as
Yeah,
well.
yeah, yeah.
Let me share my tab, and you should be able to see a very messy chart at the moment.
I do. Yeah. I read something about that.
Yeah, there's I mean, I've been using the troll comments as a method of engagement. The fact that people don't know I'm using them is a little bit sad, but I just feel like every time they say something negative and I reply in this very, good manners,
Mhm.
keeping composure, and, and they get so angry, and then so many people reply, and I get the most engagement ever.
I know.
uh,
I I
it's
I
it's just free advertising for the channel. It's great.
Yeah, yeah, so far one of my highest viewed videos was one that somebody complained about about what I drew. It's the one I drew the I drew the octagon for the boxing match for the MMA match, and some guy unloaded on me, and
It always happens. What can
right,
you do?
and
So,
I came back at him, listen, I got no reason to fight with anybody here, and it's and I think there's something to be said for taking the high road, and so I just diffused him that way, and he then, of course, goes in and deletes his comments because he realized he was being a jackass, and but it was like you draw something that's interesting or maybe somewhat controversial, it's you get more engagement.
well, it happens. So I'm gonna just continue doing it. It doesn't really stop me from doing what I love doing. Um, what we're looking at here is the daily time frame, and it looks messy, yes, because I have a combination of things that I left on from before that I can switch off now. But I actually focus most of the time on the RSI here below. It's not that I only use RSI. I'm actually a very complicated guy. I love using so many indicators, and I have developed hundreds of indicators on TradingView. But when it comes to trading manually, I like to keep my focus on 99% just one indicator. I just look at the price action and the RSI, and I admire traders that can do that, that they just look at the VWAP or they just look at the RSI or support and resistance. If you can survive with just one single thing and just looking at volume and maybe different time frames, that is, in my opinion, is better than putting too many things. Even though you see too many things here, I'm mostly focusing on RSI. That's it. And what I see here, for months we were talking about we are climbing this, and whenever I see any time frame jumping on top of a trampoline, I start thinking eventually it breaks because it's just support. So when we broke here on the 5th of March, I say we're going to start building a channel like this, and that's what we started doing. We were looking for when are we going to build a top for that channel. At this point, the channel was formed, and we continue going lower. And at this point, I say we broke the support now, and I was wrong. We built a double bottom, the one that you were showing that the whales bought.
Right.
The whales bought right around here. They fake us out. They were buying a momentum broken, and they started coming back inside. When they started coming back inside, we said there's a very high chance that we are being just faked out and they're just doing a liquidity grab there. If you took the short, take your stop loss and consider that we are in the wrong direction. And we might go here, challenge this line because this is a bullish pattern, broadening, descending, um, broadening wedge, descending.
You
And
made an interesting point about the fake out, right? I feel
yeah,
like more and more frequently we're seeing the TA get overshot, and this has been going on for over a year. And I don't know if that's to trick the algos or if it's to trick the manual traders, but I I used to react on those moves and said, "Oh, here comes the breakdown." But now I give it a little bit of breathing room, give it a little bit more breathing
yeah.
room because of the TAs getting overshot.
M- I think what happened is that personally, I my experience is that momentum, call it RSI or stochastic RSI, is much more difficult to trick compared to price. In here on the top, we can see that the price broke this trend line. So we have this trend line here, and many people were talking on Twitter, oh, we broke the trend line. That's price. When I look at price, I think price is naked. Everybody's watching the price, and it's easier to manipulate because everybody calls here for a short. So you enter a
Right.
short, and what happens to you right after that? They push you back into the range
Right.
and they liquidate everybody. With the momentum, even though this was also the case, I feel personally that that happens way less frequent when I trade breakouts from the momentum rather than the price, and that's why I move away. I still look at the price. I look at the whole thing in conjunction, but I take my decisions on the RSI for two things: less manipulation and it's always preceding what the prices will do later. So, for example,
And so are you making those, are you clicking that button right as you see that break of the trend line, or are you waiting for a candle close to ensure it's not a fake out?
I wait for candle close, and I tend to take decisions on the 4 hour. We're looking at the 1 day, and all the only reason I pull in this one here is because this, if it holds there pointing up, it can be big. There's a lot of room to go up in terms of momentum after
Right.
this breakout. So on the daily, although I wish we could do a move to the downside, my Christmas wish right now is, please, let's go to 48 because I want to buy a heck of a lot. That's what I want. I'm not
Right.
happy with this move, right? But I'm seeing it and I have to respect it. I see that the daily has broken out of this pattern. I don't like it. It could go to 90, it could go to 88 if it does what it's promising to do. And but I don't take the decision on the daily. I take it on the 4 hour. Like in this candle here on the 4 hour, I put out a short and I say we're gonna challenge this line here that has been holding us since around 28th of February. This is the 4 hours, so it's longer, shorter periods, and compared to the daily. And right after that, I say I'm gonna go to sleep, guys. So I won't
Hmm.
be able to be here, but I'm pretty much 100% sure that right after this local breakout, we're gonna also challenge this one. And most typically, I'm gonna wake up in the morning, and this guy is gonna be already outside. When
Hmm.
it was outside, I said I don't I don't like entering two candles after when you're already here because then that could be it. I rather waiting then for confirmation and a retest. And we had this retest and it carried on going higher. And so far on the 4 hour, we have this bullish move. We are doing a trampoline again. So guess what I'm expecting from the trampoline? That I'm expecting to see that this guy eventually does a lower high here, and then it comes here to challenge this and to break down. Right after that, the happy ending for the longs will be that we hold this and we make another push. The happy ending for the shorts will be breaking down and coming back inside this range here and back below here. That will be pretty bearish. We if we want continuation to the upside, ideally a retest on RSI 55 and then another push here into the 70 something. That could be the recipe to take us to 88 if we hold that. And yeah, that's the update from me.
Well, time will tell, right? Time for patience.
Yeah, we have some question asking for total two and total one, but I don't know if you still have a few more minutes or
I'm going to
you're
have to wrap it in a minute or two, but real quickly, we can hit it if you want.
total two. I think I have it right here. Actually, I have total three, and I haven't looked at it today, so I don't have something necessarily prepared for that. But
Give it to us on the fly.
let's do some on the fly. Yeah. Let's see. Higher high, and this is going down and still pointing down. Okay, so that's a divergence uh, already. Um, and total three is pushing higher and is bouncing on this. So I will keep an eye on the squeeze that we have there. So you have a potential for, sorry, I'm going back to the RSI, but it really helps me visualizing what can happen next. And I put this a little bit wrong. I'm gonna fix it. So I see very low likely that this can come there straight away. So
Right.
it's needing another retest there. And that retest is going to be extremely interesting because after bouncing there is also calling for some pullback. Uh, if the pullback comes to 50 and it bounces, it could continue going higher. Going below 50 typically on the RSI means that you're losing momentum as well. Not to mention that losing this trend line will also constitute a loss in momentum. Breakout above this will mean that we are running extremely hot. So if you are long, careful with that. That could be a great exit to take loads of profits, but not necessarily an entry to start from scratch on a deal. The entering from scratch, that already happened on Saturday. That was the short. The short would have been great, and the double bottom. Right now, the risk is too high to enter long from scratch, unless you have a very tight stop loss. But I think we can wrap it with that. And guys, remember that we can have Keith every week on Monday. All we need from you is feedback. We need comments in the video, likes. If you are watching it from Twitter, come to YouTube and write out some comments. And that's how we know that you like us working together, and we can continue doing that. We already enjoy it, but we would like to see your positive feedback as well. And Keith, thanks so much for joining me today. And I'll see
Thanks for
you
having me.
next week.
Yeah,
Thank you so
looking
much.
forward to it. Have a
Enjoy
great
the
week. Let's
next.
make some money this week.
Yeah, absolutely. Bye bye,
Uh,
guys. Bye.
Cheers.